Hi, and welcome to Dividends. I'm your friend Frankie Guzman from Valley Village, California. I want you to understand that policies come in three parts. The first part are provisions, and which are the rights and characteristics of the policy that are there to protect you, the consumer or policyholder. Secondly, riders, which are extra bells and whistles that you can add to your policy for extra money. And finally, options, which are the choices you have or your beneficiary has upon death to distribute a sum of money to your family. And that's what we're going to focus on right now, your dividend options. Okay, so let's take a look at that. What is a dividend? A dividend is a refund of overcharged premiums. Now, there's two types of insurance companies. One is called a mutual insurance company, while the other is called a stock insurance company. A mutual insurance company is owned by policyholders, which is you. And they're known as participating companies because they actually participate in dividends. The other insurance company is called a stock insurance company. They are known as non-participating companies because they don't participate in dividends. And the owners of that company are shareholders of the corporation. So you'll see the difference there. Owners of a mutual company is you, the policyholder. The owners of a stock insurance company, shareholders of the corporation. Now, we're going to assume that a dividend is declared. Now, a couple of things I want you to understand about this is that one, dividends are not guaranteed. So what that means to you is that you might not ever experience this refund of these overcharged premiums being paid back to you. And secondly, they're tax-free. Okay, you don't have to pay Uncle Sam any taxes, but let's go back to the definition of a dividend. They're a refund of overcharged premiums, which means it's your money back being paid back to you. So again, we're going to assume that a dividend was declared on a given year, and the question is, how do you receive your dividends? Well, you have about 6 options, and the first one is called cash payment. I call this one the take the money and run option because you'll get a check, you'll cash it, and then you can go out with it and buy a large scoop of Cold Stone ice cream and enjoy the cash, right? The second option you'll have is called reduction of premium payments. And this is an opportunity to reduce your overall premium payments that you make throughout the year. And what you're doing is you're instructing the insurance company to take that dividend and apply it to your future premiums, so you're not actually paying any premiums out of your own pocket until the money runs out. At which point, of course, you'll need to start paying the premiums again out of your own pocket. The next option you'll have is accumulation at interest. Now, the one thing I know we can agree upon is that the one thing we know about insurance companies is they know how to make money, right? So knowing that, in this particular option, what you're doing is you're instructing the insurance company to keep or hold on to your dividend and make it grow for you. Now, when they hold on to it and make it grow, let's go back a little and remember that dividends are not taxable, right? The actual dividend is not taxable. But now that you're asking the insurance company to actually hold on and keep your money and make it grow for you, any growth or interest that that dividend experiences, that will be taxed. Again, the dividend portion is not taxable, but the actual growth is taxable to Uncle Sam, okay? The next option you have is in the form of insurance. You'll be able to choose a 1-year term. So you have a term policy in addition to your current policy because you're just using that extra money from the dividend to purchase this 1-year term. Okay, the next option you have is called paid up additions, where you're buying extra insurance in your current policy. So as a review, if you are in a participating or mutual insurance policy and a dividend is declared, then you'll have a lot of different options to receive that dividend paid out to you. So I hope this information helped you understand dividends. I thank you for your time.